Hey everyone, Rhett Van Scooter here. Want to shoot this quick video about co-insurance, the co-insurance trap for auto dealers. Had a recent claim with it and thought it'd be a good idea to send this out to all my auto insurance, all my auto dealers out there to make sure that you don't get burned by the same clause in the insurance policy. So I'm going to run you through here kind of what this is. Um, So the co-insurance requirement in your insurance policy, if you carry inventory coverage, physical damage coverage on your inventory for comp and collision, uh, you are required to insure your inventory for at least 80% of its value at the time of loss. So I'm going to run you through two examples here so you can see what a big difference this makes in your payout. So example one, say you have a car stolen off your lot at $15,000 value, and that's your cost, not what you're listing it for, but the cost that you have in it, cost you purchased it for, plus any improvements that you made. So now if your total inventory at the time of loss is $100,000, uh, and you have your inventory insured for $85,000, you meet the co-insurance requirement because you're above the 80% requirement. So remember, you have to insure your inventory for at least 80% or more of its value at the time of loss. So your $85,000 coverage that you have on your policy is greater than 80,000. You meet the requirement for the full payment. So what's going to happen is they're going to take the $15,000 car. They're going to deduct your $500 deductible. You're going to get paid $14,500. Now, let's look at example two. Same car stolen, valued at $15,000, your cost again. Your inventory is the same, $100,000 on your lot at the time of loss. But in this case, you've only insured your inventory for $50,000. So now you are below that 80% co-insurance requirement. So what's going to happen is they are going to apply a penalty. So you do not meet the requirement for full payment. So this is how this settlement's going to go. You have that $15,000 car stolen, your cost. They're going to take what you insured your inventory for, 50,000, and divide that by what it should have been insured for, 80,000. So you get 62.5%. So they're going to take that 15,000 and multiply it by 62.5%. So that's $9,375. They're going to take out your $500 deductible. You're only going to get paid in this case $8,875. So that's a $5,625 difference from if you had carried your inventory value at over the 80% requirement on here. So let's summarize this. If you carry physical damage, comp and collision on your inventory, make sure you're insuring it for at least 80% of the value at your cost, not what you're listing them for. We get it. No one likes paying more for insurance, but you're even more unhappy when you pay for insurance, have a claim, and don't get the settlement that you expect. So in the examples, not carrying at least 80% of the value at the time of loss, reduce the claim by $5,625. Slide myself over here. So in example one, 14,500 was paid. Example two, $8,875. Big difference. Make sure you're insuring adequately so you don't get caught in this situation. So be sure if you feel like your inventory might be undervalued, give us a call to review it. We'd be happy to help you out. Sharon will also be reaching out to you soon just to do a spot check to make sure that your inventory is at the correct level. If you have any questions, as always, give us a call, 663-2004.